The Biden administration has reinstated oil sanctions on Venezuela. It says it's a response to President Nicolas Maduro's failure to adhere to pledges for fair elections. Joining us now to discuss what a loss of Venezuelan oil could mean for the U.S. economy, Ryan Berg, director of the Americas program at the Center for Strategic and International Studies, where he heads the Future of Venezuela Initiative. Ryan, it's good to have you here. I guess the initial question is, will this actually deprive Venezuelan oil from the world market? Talk about practical effects initially.
Good morning, gentlemen. Thanks for having me on. I think the answer is no, and for two reasons. First, Venezuela doesn't produce that much oil anymore, a lot of it due to its own failure in policy and seeing a massive slide in oil production in Venezuela over the last 20 years. But what little it does produce will remain likely on the market because hidden within this sanctions snapback is a long wind down all the way until May 31st of this year. And there's also a kind of hint, hint, wink, wink at the companies that have been working in Venezuela with PDVSA as joint ventures that they can apply for comfort letters to continue operating in Venezuela. That long wind down period will allow them to, on a case-by-case basis, approve a lot of these comfort letters, essentially locking in or freezing in Venezuela's current contribution to the international oil market.
So, I mean, if that being the case, is it strictly optics? Is it just an administration that just doesn't have that many other, options to try and at least cosmetically pressure the regime there?
Well, I would argue that the administration had to take the action that it did. What little credibility our policy had left would be absolutely blown out of the water if we didn't snap back these sanctions. But again, the text within the sanctions snapback itself does offer that long wind down and the opportunity for a case-by-case review. And so I think the broader macro context here can't be forgotten. We're in an election campaign. The Biden administration is very jittery about oil prices, of course, and it doesn't want to take off the market, even if it's a modest contribution, Venezuela's contribution to international oil markets. Venezuela at the moment is producing about 800 to 850,000 barrels of oil per day. It's not that much in an international market of 100 million barrels of oil per day. However, any little movement in prices, the administration is very sensitive to because we're in that election season.
Right. Yeah. And we were talking earlier about how similar calculations seem to apply to Iran. So if the oil production capacity at the moment in Venezuela has been degraded this much, I mean, talk a little bit about the situation in the country right now, I guess, economically. And I mean, is it otherwise at this point isolated from the rest of the world?
Well, Venezuela has been in an economic catastrophe for a long time. The IMF says it's the largest economic decline in world history outside of a conflict context. There's no civil war going on in Venezuela. There's no active conflict. It's just mismanagement of the macroeconomy, out-migration, loss of human capital, and so on. Take, for example, the average public sector salary at around $5 per month. The Maduro regime is desperate to have some kind of cash to be able to increase minimum salaries in the run-up to the election in their country. And so they were interested in this agreement with the Biden administration, but they had no intention of upholding any of the agreements that they signed in the Barbados Accords for freer and fair elections. At the end of the day, this is an authoritarian regime, and they're going to do what they think is in their best interest to stay in power.
You mentioned, the out-migration, which has obviously been a huge factor for a while. Is there any way in which, the U.S. has an incentive to try and stem that? Obviously, a lot of those people are going to end up trying to seek asylum at the border, surely not only coming from Venezuela. But is there just essentially complete detachment from these two countries, or is there any conversation along those lines?
Well, we've seen as part of the deal that the administration struck, at least initially, there were repatriation flights back to Venezuela. Those have been suspended by the regime when we reimposed other sets of sanctions on the state-owned gold company called Minervan. And so the regime, even though it lacks any democratic legitimacy, understands how democracies work and understands U.S. domestic politics very, very well. The Biden administration, when it lifted these sanctions in exchange for these commitments to freer and fair elections, they thought that a boost in Venezuela's economy would keep people in place. Venezuela has seen around 8 million people leave the country. This is a migration crisis that rivals Syria's, actually surpasses Syria's, and rivals Ukraine's, where there's an active conflict. The problem is that the administration didn't understand that regime type matters. A lot of people are fleeing the violence and the repression, not just the economic calamity. And so according to a recent poll, only 40% of people said that they would consider staying in the country. I'm sorry, only 15% of people said that they would consider staying in the country if Maduro was declared the winner of this election. And so a lot of it has to do with the lack of hope that people have about the prospects for political change and the idea of the continuation of this very authoritarian regime in power.